Welcome to the demo of the PT Screener version 3. We will look at the shortcomings which are there in the current system in the PT Screener V2. The screener is a closed system. When I say closed system, it means there are fixed set of pairs. The model is based on fixed time frame. Like we have taken 1 year data, like that is 248 candles. Then fixed period. So time frame in the sense daily candle, and fixed period is 248 days. So the system was a closed system, so you cannot modify that, you cannot change them. Similarly, there was no customization, so there is no, you cannot modify the model parameters. Like I want correlation to be from 80 to 100. So the system was like it will be from 70 to 100. So like that, there was no customization and no custom backtesting. And also limited markets were there, like commodities were not there, and forex and US markets also were not there. So was looking at a solution where it can overcome all the challenges what earlier version was having. So I developed an open system with this version. That means you can add your own pair combinations and you can create your own model with different time frames and period. I want to create taking a day candle with 48 periods. Instead of 248, I want to do with 48. I want to do with 90. Like that, you can customize your own solution. And also you can use different statistical tools and parameters for customization, like correlation is there. So you can set your parameters. I want to do it from 80 to 100 instead of 70 to 100. I want to do it from 80 to 100. Similarly, there are other lots of statistical tools where you can use those tools to customize the model. And you can do backtesting with different custom entry triggers. I want Cointegration to be there. I want Hurst to be there. I want other things also. We'll look into that. So, and also multiple markets like commodities, currencies, and US market. So just we'll look at the key features. So the first feature is the web-based. So earlier it was an EXE-based model. Now it is a web-based. That means you can access through a web browser in Windows as well as in the iOS. The only thing is format is for a larger screen size. So if you want to use it in mobile, it may not be ideal. So right now it is for the system only. And you can use on multiple systems. See, earlier the software was fixed to one system at a time. So here you can use it on multiple system. So yeah, as you can use in any browser, you can use on multiple systems also. Similarly, backtesting, you can create your own model. And there are multiple models you can create. One is based on the price ratio model. What we have exist in the current version has a price ratio model and some bit of a fair value model also, where we use fair value as the main component for creating the model. Then there are convergence model and divergence. I will come to this convergence and divergence model in coming slides. And different types of instruments also. Earlier it was only futures. Now you can use CFDs also, that is contract for differences. It is similar to futures, but there is no contract involved. It's only whatever price difference is there, that would be settled. So generally, like interactive brokers and all, you have this kind of contracts. The advantage of that is you can pick whatever amount you want to invest. I want to invest 1 lakh. So 1 lakh divided by the cost of the stock, you will get quantity. So you can just take that. But in futures, the quantities are fixed. So there is a disadvantage in the futures. And the statistical tools in the new model we are providing is correlation, cointegration, fair value, Hurst, and RSI. Okay, so I'll come back to the statistical that I will explain in next slide. And you can create custom pairs. And also in this, we have used the AI models to predict the profitability. Okay, so the profit probability is predicted, and also it gives the trade opinion, what is the current position and how the user can interpret the data. Okay, so those things are also provided. And pair rating, see, by admin the pair is rated, and also the user can rate themselves, not only at a pair level, at individual entry level. Okay, right, so when you are entering a pair at 3 standard deviation, 2.7 or 2. So I can give rating at individual level. So a pair might be good at 3 standard deviation. So I'll rate that pair at for 3 standard deviation. Okay. So the remaining 2 I won't rate. So that kind of customization is also available. And you can track your positions, live trades, and you can do paper trades. Now coming to the trade direction, earlier we used to do convergence trades. So what convergence is? See, whenever a pair is deviating, so it goes far away from the mean, and when it turns back towards mean, at that time we are taking the trade. Okay, so that's the convergence statement. So when the pair is converging towards mean, we are taking. Now, many times what happens, we take a trade and it moves in the reverse direction. Okay, so at that time we get a feeling that why not we do in the reverse direction itself. So for that kind of thing also, I have given facility in this one. It is the divergence trade. So whenever the gap is increasing, so we take the trade and expecting the gap to increase further. That's the divergence trade. So the convergence and divergence. And earlier we used to enter only through price ratio z-score. So that the z-score was calculated on the price ratio, and based on the levels we used to take trade. Similarly, now we can do with the fair value also. When I say fair value z-score, what is fair value? So it is like a theoretical price between the two assets. For example, one stock is at 100, other stock is at also 100. Now, if one stock moves to 120, now theoretically, if both perform equally, that means this price also should be same 120, right? So, but it is quoting at 100, for example. So that there is a difference of 20 rupees between them. So that is called the fair value. So what would be the fair value of the underlying asset compared to the outperforming asset? So we take that fair value and calculate the z-score on that fair value. Okay, so in statistical terms, we do regression, we get the residuals, and on that we calculate the z-score. So there are two different types of z-scores we can use to enter the trade. And the statistical tools, what we can use here is, one is the correlation, whether the two asset prices move together or not. So the correlation, if one is moving up and the other also should move up, so then the correlation would be there. If one is moving up and other is moving down, there is a negative correlation. So we can use the correlation between the two assets for considering a pair for entry. Similarly, co-integration. See, the co-integration assesses if two prices share a long-term equilibrium. That means in long term, whether they will come back to their mean or not. So that is co-integration. Similarly, RSI, you calculate RSI for single stock. Here what we are doing is we are calculating RSI for the pair. So you calculate the price ratio and you take RSI for that. Similarly, there is new tool which we have included here is the Hurst exponent. The Hurst exponent helps determine if the mean reverting nature of the pairs, whether the pair is mean reverting or not. So generally the values are from 0 to 1. So if a pair is below 50, so generally like 0.48, 0.45 around that range, that means there would be mean reverting. So if it is above 0.5, then that means the pair is trending. So in a long term or in the short term, the pair is trending. Similarly, profit probability. So the AI calculates the profit probability of the pair by taking the historical data into consideration and market trends and statistical patterns and come up with a probability. So it will say, okay, if you take this trade, there is a probability of 70% or 20% or 100%, right? So that also can be used for calculation. Now let's see how the whole system works. So let me switch to the application. Yeah, so this is the login screen. So I sign in with some Google account. Yeah, I switch to light mode. There are multiple tabs here. One is the dashboard, lab, positions, and subscribe and all. First, let's look at the lab section. So lab is like, it's a lab where you can do all kind of experimentation. These are the existing portfolios are created. What we do is we will start with creating a new one. Okay. So for better understanding, easy explanation, we will start with a new portfolio. So I'll give a portfolio, I will say financials. Now here we have facility to select what kind of candle time frames are there. See, right now, initially at the launch, I have given only the day candle, so it's 1 day candle. In coming weeks, I will be providing the different candle time frames like 5 minute candle, 1 hour candle, like that. So multiple different time frames will be provided. Similarly, candle period also, right now given only 248 and 48, but in coming days, you can enter your custom, I want 90 days. You can enter that 90 days. Okay. So for example, if you are doing 5 minute candle, I want to make 100 candles. So you can use that. So at the launch, I have given some fixed values, but in coming days, that would be updated so that you could give your own periods. Similarly, trade direction, whether you are doing experimentation with the convergence or divergence, you can select which one. Initially, we'll go with the convergence. Now, the next one is Z-score method, whether it is price ratio or fair value. I've selected price ratio. Now, it is lot wise or leg wise. See, if you are doing with futures, it would be lot wise. If you are doing with CFDs and all, it would be leg wise. So if for each leg, how much amount you are investing. So it is leg wise or lot wise that you can select in at the initial level. Later you can change it. Similarly, what would be the backtest years? So I can select maximum 5 years. Right now I will be selecting 3 years because when I take 5 years, the corona data would be included, which might skew our model. So I'll take 3 years. Next. So here you have facility to import from the existing portfolios. Already pairs are there in that portfolios. I can import from them, or I can select from the different sectors. For example, I am looking at financials, right? So I'll go with financials. So in financial, these are the pre-defined pair combinations. So I'll say select all. So those are all selected. Now on top of it, you want to add any pair, you can go to add pair, you can select any pair. For example, I'll take Bandhan Bank, and in the symbol 2, I will go to financials and say this is mid cap. So I'll go with some Federal Bank. So I can add here. So that way you can create your own pair combinations. Now I'll say create. If you want to remove any pair from this, you can just use the delete button here and you can delete it. Now when you create this, automatically one portfolio settings would be created, which is called as unfiltered. So if you are not applying any filters, that means whenever a trade is coming and you are taking the trade and how the performance would be. For example, we have selected for 3 years. So for 3 years, at 3 standard deviation, we got 66 trades. In that 66, 55 were successful. So an accuracy of 83% and 17%, that is 11 trades went negative. And overall profit we could generate is this much. And the average per trade is 13,520, which is good, which is 1.35%. See, this 1.35% is not on the margin, but on the contract value. So here by default, the contract value is 10 lakhs. So on 10 lakhs, you are earning 13,522 per trade, so which is 1.35, which is very good. If you want to look at in the lot wise, so if you say lot wise, then you can say, okay, at 3 standard deviation, it is 12 lakhs, 10 lakhs, and 41 lakhs. The number of trades are more, accuracy is a little down. But if you see the average days here, 24, 34, and 71 days. Okay, so for leg wise, profit amount would be little lesser because you are investing 10 lakhs per side. But in lot wise, what happens is sometimes you are going with 2:3 pair combination. So at a time you might be investing 20 lakhs to 40 lakhs in one pair. So obviously the returns would be much higher. So here to make ourselves understand the system better, it will be better to go with the leg wise so that we can understand, okay, we are investing 10 lakhs on each pair and how the returns would be. Now, this is if you are not using any filters for entry purpose. Now, there are certain entry filters available. For example, if you see correlation is there, overlap count. See, the overlap count means, for example, if a trade has given entry for the first time, maybe at 3 standard deviation. Okay, now it would be the first time it is coming at 3 standard deviation. So it is overlap count would be 0 because there is no overlap. First time it is coming. Now what happens is when it came below 3 standard deviation and after a couple of days again it went back above 3 standard deviation. So what happens? Again it is, okay, so it has gone above 3 and when it came here it is 0. Now again after a couple of days again it went back and it came below. So now it is overlap is 1. So because already there is a trade and that trade is not yet closed. It has not hit the 2 standard deviation. It has not closed. So again it came down. So the overlap would be 1. Maybe again it came down. Now here overlap would be 3. Okay, so that's the overlap. Next is the cointegration, RSI. For RSI, there are two different values for positive z-score and for negative z-score. Generally, what happens is the z-score is positive or negative. That means if the symbol 1 is outperforming, then the z-score would be in positive. If symbol 2 is outperforming, z-score would be negative. Now, at that time, the RSI would be different. For a pair which is in positive z-score, generally the RSI would be in the upper hand, 60, that is above 50 and similarly for negative it would be below the 40 levels, 1 to 40 levels. So RSI different values for negative and positive. Then there is Hurst, then profit probability is there. Similarly there are exit filters. One is the profit percentage. I want to get out of the trade with a certain profit percent, maybe 1%, 2%, half percent like that. Similarly, stop loss filters are there. Stop loss percentage, stop loss days, and stop loss correlation. Okay. Here, certain functionality is there. Here, I will use the duplicate functionality at the right hand side and I create a duplicate of the same setting. Now here I will edit that. I can edit. For example, I want to see what would be the difference if we'll trade only the first time when the trade has come. So I'll just check this one. So here I'll say 0. That means I will do only trade when it is giving the signal for the first time. And I'll say update. See the difference here. Here there are 513 trades. And if you are doing only the first trade, first time when it is giving signal, there would be only 170 trades. So the accuracy has come down comparatively. Right. So of course the overall profit would be coming down and average profit also has come down. So that means the overlap count more than 1 is giving much more profit. So I can check it. Okay. So I want to do the whenever it is giving the signal for the second time. Okay. So at the higher end, the at the 3 standard deviation, this average profit is same. Here also a little bit same. But here at the 2 standard deviation, it is not at all giving any profit. Okay, so similarly, I can say, okay, from 0 to 5, I will trade whenever it is giving me entry from 0 to 5. There is no improvement at all here. You see, if you compare with this, okay. So here, yeah, so 0 to 5, The number of trades are same, only at 2 standard deviations, some trades have come down. Not a great trade outcomes. So we can ignore this one. Right. So the overlap count has not much effect on the output because see, without using any filter, still the accuracy is very high, right? So 83%, 79, 74. So not much of an effect. Okay. So what I will do is I will remove the overlap count. Then I will go with the correlation. Let's see if correlation has an effect. I'll say update. So the correlation we are taking that filter is 80 to 100. And if we can compare here, the number of trades obviously will come down and not great returns here. Now if we see, okay, let me see by changing it to 70 to 100, will it make any difference? No, not much. What I'll do is I'll say I'll go reverse. Okay, instead of 70 to 100, if I say minus 100 to 70, what would be the effect? If you can see here, it has a positive effect on the outcome. So the average has increased at 3 standard deviation at 2.7 also, and also at 2 some improvement is there. So by this we will know that correlation, we used to think that any correlation above 70 would be great for the trade, but if you see the results here for the financial pairs only, I am talking about financial pairs, the correlation in the negative is also giving good returns. So this is one combination. Now what I can do is I can see how if I am using this combination and what would be the outcome in 2024. Okay, so what I'll do is I'll add this to the watch list. Now I'll go to dashboard. Okay, so in dashboard there is financials we go and there is a closed trades here. So we have created 2 portfolio settings. So I'll see what would have happened if I have not used any filter. So in 2024 from Jan 1st, you see we got good number of trades and good returns also, like 15 lakhs here, 3 lakhs and 3 lakhs with a good average per trade. Similarly, if I use the correlation minus 100 to 70, here also good returns per trade, 34 trades and 33 positive outcome, only one trade which has gone wrong. Here it is 100%. So if we have just used this combination, you would have made so much profit. And average profit per trade is also very good. So you can experiment here with different combinations and see how the portfolio has given you returns. Now we can go to the next one. So I'll duplicate one and say this time I will check with the cointegration. Cointegration by default it is 95 to 100, accuracy of 95. So I'll just update it. Average profit is excellent actually, 25,000 per trade. That too with a 10 lakh investment, right? So 2.25, very good. But if you see here, if you are using co-integration, the number of trades have drastically come down. This is in 3 years, only 6 trades at 3 standard deviations. That is very less. Similarly, 10 trades at 2.7, very less, right? So 80, okay, fine. But still, the overall, if you see, the number of trades are very less, but accuracy is high. So you can use this combination. I can enable this. I can add to the watch list. Again, refresh this one. So if you are using co-integration, we still got like 19 trades this year, and yeah, good returns, 18, 1.85, 1.31%. So it's okay. Comparatively, if you see here, the number of trades are little higher and the overall returns is also much higher compared to the co-integration.
Excuse me.
Yeah.
So this basically is calculated, the trade is calculated only for the 10 lakh margin used
Yeah.
once.
Yeah.
So the another trade at the same time won't be executed, or it would be executed.
it would be
Okay.
executed because here we have not selected overlap. Now, if we have funds for only one trade, right? So what you can do is, for example, I'll duplicate this one. Okay, if you have taken all the trades which have come, then this is the returns. Here in this, for example, I want to do whenever it is giving me the first overlap. So I have only budget for one trade at a time. Okay, you can select this one trade and see how it performs. Okay, so you would have got very less number of trades. The same thing, for example, I can rename here. I'll say Cointegration with one trade.
So if the overlap is increasing means then you need to double your investment, right? If multiple overlapping means every
Yes,
overlap.
yes,
Okay.
yes. See, instead of taking 2, 3, 4 lots at a time, what we can do is we can take one lot, then you overlap, then again you take, again overlap. You can take like that. You can plan out the trades because
No. My strategy. If the overlap on the same counter, but if the same time others pass giving signals, right, I may have to fund to enter those stocks.
yes, yeah. So that's the thing. That's the fund management. So if you have funds for doing only one
Okay.
trade, then obviously you will take only one trade. And if you don't foresee any new trade coming, then you can take the overlap trade also. If you see the
Okay,
other
sir.
good opportunities are coming in pipeline, then you can wait for that.
Sure, sir. Thank you.
But actually, it does not require 10 lakhs for one lot of buying and selling the future, no?
Some require lesser. Like see average it will, if you take, it would be like 5 to 8 lakhs per lot. See similarly, if you see, I can change it to lots here. Right. If you say lot, then it is 7 lakhs here returns. I can expand here and see which trade. Now if you see here for this trade 20,000, 16,000, I can just expand this one. This is 2023. I can further expand and see how the pair has performed. Okay. Here we are not using any stop loss, so the trade has continued till 70 days. Yeah. So depending upon your funds, depending upon your risk profile, you can play with the combinations, right? If there is no fund limit, so then you can just put, oh, okay, whenever a trade comes, I will trade. Maybe if you are doing CFDs, I will invest only 1 lakh at each leg. So even if it comes 10 to overlap also, I will be able to take. So that is your trade management depending upon your funds. So you can play around with all different combinations, right? Yeah, if you are doing CI with only one trade, you would have got 5 trading opportunities, all are successful, and you would have made like 70, 80,000. That means every month you are making 10,000. Depending upon your funds, depending upon your risk profile, you can customize the model. Now, co-integration, as I said, 95 to 100 number of trades are coming down. So I click the edit button and I'll say, okay, instead of 95, I'll make it 90. Okay, the number of trades have come up. The overall profit also increased, which is better, right? Comparatively, it is better. Now, I'll duplicate this one again. Instead of this, what I'll do is I'll go with the RSI. I'll say edit, I remove co-integration, I'll select RSI. When you select RSI positive, negative, automatically that would be selected. I'll say update. Now, comparatively, if you see, returns are much higher. So the number of trades are little higher and overall profit is also higher comparatively with, to the co-integration, and per trade also it is higher, but at 2 standard deviation it has come down. So what I can do is I can play around with this. So instead of 60, I'll say I'll make it little tighter, 65, and instead of 40, I'll make it 35 and say update. Now if you see here, this has improved, and this also drastically improved. Instead of 6,000 per trade, it is 13,000 per trade. So the accuracy also has increased here. So this combination looks good. Let us see, this is RSI, right? So RSI, I just name that and enable it. Go and refresh here, RSI. Yeah, good returns, 2 lakhs, 3 lakhs, 1 lakh. Accuracy is also okay, not bad. Good returns. Yeah, we can work with the RSI combination. Similarly, I can and instead of RSI, I can try with the Hurst. I'll do it with 0.5, 1 to 0.5. Comparatively, not so high returns, but okay, 1% returns is a good enough for this. Now, suppose in one combination, let's look at maybe I'll say this is a trending thing, right? So this is giving good returns comparatively. Number of trades are okay. Yeah. Now this is at 2 standard deviation, the returns are not good. You don't want to trade. So what I do is I just remove from this portfolio setting. Okay, I don't want to trade 2. I'll say okay. Only at 3 and 2.7. I'll say Hurst. Go here. Check. So only 3 and 2.7 only will be visible. So even if any trade comes at 2, it won't show you because you have decided that I don't want to do 2 standard deviation for that combination. So that kind of functionality also is available. Now I can use combinations also. Okay. So for example, we are getting good returns at this combination, for example. So what I do is I duplicate this. Now on top of this, I'll say, okay, correlation, I've used this one. Similarly, I want to overlay it with maybe RSI with 65 and 35 because at this level, we got good return. So I'm using 2 different combinations. Yeah, so RSI with correlation, the returns are good. The positive trades are 90%, 80% here with okay kind of returns. But if you look at the average profit at a higher end, right, 20,000, 18,000 is. I look at lot wise, these also good returns. Okay, but if you see, if you use multiple combinations, the number of trades are coming down. So like that, I can use all different combinations. So I want to make it more accurate and all. You can use all the different combinations and make a new model where you are filtering out the data so that the accuracy is going up further. Okay. So here, there is another functionality as I told, profit probability is there. See, this profit probability is using AI, it is calculated. It will consider all these values. It will consider the correlation, overlap count, cointegration, RSI, Hurst. Then there are other couple of things also which are not displayed here, but it will take those consideration. It will do the pattern identification and all, and it will calculate, okay, with this combination, in historically, this combination has given return. So based on that, it will calculate and say, okay, the profit probability is so and so. So here what I can do is I'll say a profit probability which is I'll say which is above 70, for example. Update. Okay, this combination is not good. I'll remove this one. Okay. Yeah. See, if you see, I said okay. We are giving only profit probability 70. There is no other filter here. So the overall, if you look at it, there are 513 trades here. Only 149s are above 70. So the accuracy is this much, and this is the returns it has generated. So you can play around with this different thing. Now coming to the exit filters. Okay, so here what I will do is I will just remove the profit probability also, and I say, see, our goal should be to generate equal amount but with less number of trades. That would be the trick here. When you are generating same amount with less number of trades, that means your margin requirement is coming down and per trade income is also going up. So that should be the basic idea in changing the settings and looking at what kind of output we are getting. Okay. So here I will be using profit percentage of 1%. So if I am booking at 1%, yeah, the number of trades would be same, right? 66, 123 and 50. The same thing would be there. But instead of waiting for the target, I am booking at 1% return. So you are making good enough profit here. I'll switch to like here also still 21 lakhs here. Here it is 17 lakhs only. So that means you are booking at 1%, you are making more. And also if you see here, it is 41 days, average days, 41 days. Here it is 71 days. So our goal should be to increase the average profit and reduce the average days. That should be the goal. Yeah, like this you can do. Similarly, I can say, okay, stop loss 10%. That means if you are investing 10 lakhs, I am ready to take 1 lakh hit per trade. So what would have happened if I used 10% as the stop loss? Yeah, in this 66 trades, only one trade has hit the 10% stop. Okay, that means 1 lakh. It went to negative 1 lakh. Okay, so I can just open this one and see which trade. Maybe this one, PNB and Bank of Baroda. Yeah, 10% it has hit. Okay, so now if I use stop loss as 60 days, so update. If I use stop loss days, yeah, one more trade has hit stop loss here. Here 13 trades, here 118 trades. But if you see here, the average days would drastically come down because we are using 60 days as the stop. Sometimes what happens, the trades will go on like 100 days, 200 days also. So by default for 1D candle, that is 248 candles, it will take 365 days as the default stop loss. Otherwise, the trade will be continuing till 365 days. So these are the different settings. You can use stop loss correlation. If I am using correlation for the entry, I can use the correlation as a stop loss also. Now here, for example, in this combination, we said, okay, good returns are there. Now I can expand and see what are those 41 trades and which trades are negative and positive. Now if you look at this one, okay, only 3 trades are negative. Now what I can do is I'll click the settings here and I can further filter this data. Okay, now I want to look at profit greater than 0. That means all trades which have given negative, not individual trade, but as a group. Like if this ICICI HDFC has given only one entry, so it is negative. Sometimes you may get 3-4 trades, but overall is negative. One trade might end up in positive, but the remaining 2 has given negative. So I can filter out here. So all the trades, now when I do this one, obviously it will be 100%, right? So here what I can do is, okay, these pair combinations are good. Now what I'll do is, I'll say rate these pairs. Now all these pair combinations are rated. If I remove that, okay, now these are not rated, right? Now you may sometimes think that, okay, one trade in 3 years is not a good indicator, right? So maybe you can say trade count. Trade count should be greater than 2 or greater than 1. So only trades which have greater than 1 only will be displayed. Now you can rate those trades. So it is in your hand how you want to rate, give the rating. Or else I want, of course, here we have selected only financials. In the overall all sectors, you can select which sector you want to see and you can rate them individually. I want to see only rated pairs or maybe unrated. I'll see only the unrated ones. These two are unrated. With the combination trades, if I select this one, submit, these three are not rated. Yeah, based
Mahendra,
on
what does mean by rated? Who is getting this? I mean, system is getting automatically, or you are somebody is getting?
yeah, system will give rating at the beginning. So when you have created your account, the default rating will be there. After that, you can change, you can add, you can remove.
Okay.
Yeah. Now, sometimes what happens is I have duplicated, I want to compare. Okay, so for example, I want to compare this RSI with 60 and by the default 60 and 40, right? Update. But I want to compare, but it is at the top level right here. So what I do is I can move this one. I can say move up. So it has moved up again, further move up. Again, move this one up. Yeah, here now both RSI. Now it is easy for us to compare which one is better combination. Okay, now I'll say, okay, I think I will go with this combination. I can delete this one. I will add this to the watch list. Now I can track this combination. So one more thing is, suppose you have fixed this one. Okay, now you are happy with this combination. You want lock this one. So I can use this lock. So when you lock that one, you will not be able to delete. You will not be able to edit anything. And simple functionality where you can lock the settings. So leg-wise, lot-wise, up, down, add to the watch list. If you are adding to the watch list only, it will be visible in the dashboard. Otherwise, it won't be visible. Locking, edit, and delete it and duplicate. Okay, we'll look at the other combinations which are already there. So I go to the lab and I will say, okay, I want to look at this pair value convergence, right? So unfiltered one, unfiltered data, if you see, for fair value, you will get more number of trades compared to the price ratio. So here, the system has removed the 3 standard deviation and 2.7 because the returns are not so good. So it is only 2 standard deviation, 1500 trades in last 3 years. Now with co-integration with 95 to 100 and profit probability of 80% with stop loss of 10%, stop loss days of 60, the number of trades have come down, but the accuracy is like 85%, 86% here, which is good. You are making 13,000 per trade for leg wise. If you look at lot wise also, it's 11 lakhs you are making. Now the similar thing you can see fair value convergence and closed trades. It gave 13 trades, 2 lakhs profit with 16,000. I would like to look at lot wise. See, lot wise 3.3 lakhs profit is there, 13 trades, one trade hit the stop loss. I can look at them. Okay, so Hindustan Petrol and BPCL. Now, here if you look at this one, these are the rated pairs because historically, if you see, these pairs have given an entry point and these have not. Okay, so if these, we would have not traded this one. We have not traded this one. Okay, so whether we would have traded or not will depend upon the pair settings at that point of time. So yeah, so the rated and not rated also can be looked at here. Similarly, for co-integration, if we are using, and the accuracy is 96%. So if you look, see here, 96% accurate, 28 trades, 27 successful, and 5 lakhs profit, which is very good. So I can see if in 2024, 8 trades, it is 100 instead of 96, it's 100%, 2 lakhs profit. Similarly, Hurst it is 91%, so maybe one trade has come down. Yeah, so all are rated. One rated pair has given negative return. Yeah, similarly, there are different combinations. One is the price ratio convergence with 248 candles, and this is divergence. That is reverse, right? If it is going reverse, for example, I can use a 1% target if it is going reverse. So in divergence, we will not be trading at 3 standard deviation, right? So at 2.7 and 2 also, but at 1 standard deviation. So if it is crossing 1 standard deviation, I am going to take the trade. So this is mean. This is 1 standard deviation. This is 2. This is 3. Similarly, -1, -2, -3. Now a pair has come here and it is crossing 1 standard deviation. So this is going up. So there is upward direction, right? Now here we are taking the trade, and whenever it comes to 2, we are exiting. So this is the entry point. So at 1 we are entering, at 2 we are exiting. Now you can check at the, if we are doing the same thing at 2, what would be the results? So that also you can do the back testing and you can check. So whether it would be feasible for us to trade at 2 standard deviation or not. Yeah. Here the high yield is there. More profit comparatively with this one. Here it is high yield. See here, if you see per trade it is only 4,000 rupees. Here the high yield combination, that is correlation from minus. See, for normal thing, the correlation should be at a higher end, right? But we are doing the negative trade. So my correlation should be in the negative also, right? So correlation is -100 to 10. Cointegration is also below 95. RSI is also reverse. The settings are all reverse. See, for positive, it should be from 60 to 100, right? But here it is 20 to 60. Here it is 40 to 80. And profit percentage, we are looking at 4%, stop loss at 15%. Combination, you can look at this one, stop loss with 60 days. And per trade, it is giving good returns. Yeah. This way, you can explore all the different combinations. So price ratio convergence, price ratio divergence, fair value convergence, fair value divergence. Then we have banks, only the banking sector, then the banks. PRC is price ratio convergence. FPC is fair value convergence, price ratio convergence. Then you have 48 days also. PR convergence 48. Here safe level 1, which is like 80 to 100, RSI and profit probability of 50. For the other like 248 and all, profit probability above 70, above 80, 90 would be better. But in 48 candles, the profit probability of 50 is also better. With 48 candle, the number of average days would be much lesser than the 248 candles, right? So of course the average profit is also less, but the thing is you are going to take the trade and in 2-3 days you are exiting it. So in that, earning a little bit like 1% and all is very good. See here 643 trades are there. If you can, if you expand this and if you filter out the trades which have given negative returns, so I can just mark the positive trades with rating. Then you do only those trades, those rated trades which will give you good output. Here if you see, a trade with 9 trades and given only 8,000 is not rated. Right. So 9 trades, 90,000, so 10,000 return per trade. So based on your setting, okay, I want to only negative trades I'm reviewing, or a good returns, a good percentage, you can look at it and you can rate. Here, 3 trades, 1,792, it is not rated like that. So you can rate and you trade only those trades. So what happens is, for example, if I say greater than 0, now 100% accurate, but if you see here, on average, you are making 7,000 per trade, 35 lakhs, but still we won't be able to trade all those things. But if you do only the rated ones, and the average would be better. So moving on, we will move to the dashboard section. In dashboard, we have exit, entry, watch list, active trades, and close trades. So the entry in the live market time, it will give you if there are any entries or okay. Today there are no entries for this combination. If you look at divergence, with unfiltered, there are certain entries available. Here, this is divergence, right? So that means it is going beyond one standard deviation. So here it was below one standard deviation. Now it has gone above standard deviation. That's why it has given an entry here. Similarly, Pharma Cipla was below 2 standard deviation. Now it has gone above 2 standard deviation. So entry. Similarly, here below and above. But our custom portfolio settings, there are no entries because we might have said that correlation should be -100 to +10, right? So it is now correlation is 97. So that's why it has not come in that combination. If I look at the fair value convergence, here also unfiltered. Similarly, here if you see fair value divergence, so many trades have come. Okay. So if you look at this, if you look at here at safe level 1, there is an entry has come and which is also rated Bank of Baroda and PNB and Wipro and TCS. Okay, if I click on this, I'll go to the pair. These are the normal pair values: cash neutrality, correlation, Z-score, fair value Z-score, and minimum maximum. In the chart section, it will display the performance of each pair over a period of 1 year. I can change it to 2 years, 3 years, 5 years. Okay, so how the pair has performed. Now, if you look at here, both are like equal, almost equal performance. And this is the price ratio distribution chart. And you will see there is an extension here. So there is a skewedness here. If you look at here, now we are at 8.33, right? So 8.33 somewhere here. This is the Z-score chart, and this is the EMA, that is the exponential moving average. And a new chart which is RSI. This is 60 and this is 40. So now it is quoting above 60. So for positive Z-score, yeah, it is Z-score is positive. So positive Z-score, the RSI would be above 50. And this is the fair value, and this is the fair value Z-score. These all charts which already in the current software it is there. So I'm not going in depth into that one. Okay. Now here, if you looked at here, Wipro TCS is not rated. See why it is not rated? Because previously in last 3 years there was no entry at that combination. So that's why we have not rated. It does not mean that it won't give you profit because there was no entry, it did not give a rate. Now you can look at, okay, for example, at safe level 2, any entries came. Now one entry came and which gave negative returns. I can expand and see when it came. That is long back 2022. I can see unfiltered at 2 standard deviation, accuracy of 79%, nominal return. So here you can think, okay, whether to do or not. I can skip this trade, fine. Now Bank of Baroda and PNB, it is a rated. Click on this and I'll see, okay, at 2 standard deviation, only one trade has come with a positive returns. So you can think through, okay, whether to trade or not. Similarly, exits also we can see. Any exits have come with this combination. Okay, at fair value convergence 48, there is an exit here. Wipro TCS, the entry was at so and so date, 6 days. This is the entry time. The Z-score is 2.93. Now we have entered at 3 standard deviation, exiting at 2. So here, so overall profit it is 14,000 we are getting. In unfiltered also, so many exits it is showing. You can check on this. Similarly, fair value convergence, if you see in the HPCL and ONGC, there is an exit. So you are making this. Here, if you see BPCL ONGC, there are 2 trades.
Excuse me. Just want to know what is the difference between the unfiltered and filter one? Like the filtered version of your software is what? Like the criteria?
Yeah, unfiltered is we are not putting any filters like correlation, cointegration, Hurst or anything. As and when the pair is crossing 3 standard deviation or 2.7 or 2, we are taking irrespective of other values. Okay. If you are putting filters that okay, when I am entering the correlation should be in this range, then only I will take the trade. So that is filtered.
So what is your safe level 1 and safe level 2 filters?
That if you see here, which one we have seen, the FE convergence, right? Yeah.
Okay, got it.
Entry,
Understood.
safe level 1, safe level. So these are the combinations. Correlation 0 to 7, cointegration. If these values are satisfied, then only it will come under that portfolio settings.
So, sir, safe level 2 is better or safe level 1 is better?
It all depends on the
No,
settings. So
better
I
in
am
the
just
sense.
see as a default, safe level 1 and 2 is there. If you compare this, okay, if you compare this, cointegration 1 to 50 is given, 1 to 50 is given, RSI same, profit probability same. Only one extra condition is CR correlation is in this range. Now I don't know whether
Correlation. So safe level 1 is safer. You can say that.
I don't. No. It's like only given some name, right? So
Okay. So level 1, level 2 does not signify anything.
nothing, right? So
Okay,
only these
okay.
settings are there. How to decide which one is better, which one? You have to go to the back testing. We go to the lab, we go to FE convergence 48 and see safe level 1, what kind of returns it has given. Similarly, safe level 2, what kind of returns it has given. Then you compare, okay, safe level 1 and safe level 2, okay, both are good. I can take both the combinations, or I would stick to here if you see. Yeah. So yeah, the safe level 2 is better because it is returning 10 lakhs, 7 lakhs here, it is 7 and 3. Okay. So there are two things. If you have funds, you can look at profit. Which one is giving me more profit? If you have less funds, then you have to see the average. Which trades are giving me more average profit, right? So it all depends upon your funds, your risk profile and all, and the number of days, right? So all these
And
settings.
one more thing, sir. On the dashboard, the list which has been given is sector agnostic. So it will cover all the sector except for names which are given banks. So for example, FP convergence will include all sectors.
Yeah, see here it is including all sectors here, all. For banks, only banks are taken. For pharma,
Okay.
only
And
pharma is taken.
so
Other all
can this
combinations are
list
there.
be modified? So when we are applying a filter by taking this in the lab, for example, PE convergence to 48C, if we want to filter this list only to financial companies, can we do that, or that
You
we have to
can do
make a
it.
new filter?
That's what see here what I have done is, okay, so I have created FEC 248, right? Just now we have done the finances. Similarly, you can split it. Okay, you go
Okay, so basically we can create a new watch list.
you go to portfolio, you give some name. For example, you want, okay, oil, right? So I want to do for oil. You can see which one you want. You want to do convergence or divergence, price ratio, fair value, any combination. You can try all actually, right?
Okay.
You can create for one
Okay.
and see how it is giving. Now I'll say next. Then you can say sector. I'll say energy. These are the combinations. I'll say add. I'll say create. Okay, so by default, unfiltered is created. Horrible. Okay, right.
Okay.
So
Okay.
now can you do something? Can you put some filters where it can generate a positive return? So okay, fine. Anyhow, unfiltered is not working out. So what I'll do is I'll duplicate it, or you can change that one also. I'll say whether correlation can improve the. Yes, of course it is improving. Drastically it is improving from minus 93 to plus 84, from minus 7 lakhs to plus 2 lakhs. That means correlation has an effect on this industry, on the pairs. Okay, now can I further improve on this? I'll duplicate this one and say, okay, number of trades are little less. Can I increase the trade? So I'll just say from 70 to 100. 70 to 100 it is giving. That means anything which is above 80 only is working out. Okay, so from 70 to 80, horrible results. I can just check it. So full.
Okay.
So you should not trade if it is in between this. Or maybe I'll say, okay, I'll check this combination. Worst, right? So For this combination, anything above 80 is good.
So basically your app and this thing shows like yesterday's data, not even today's data it shows, no? Like I was checking this.
Today's data also. I have not updated now because I'm doing the demo, right? So I'm not yet updated.
Okay. It would be, and so the entry and exit would be at end of the day. What time it would be?
Yeah, it will show throughout the day. Right. So, but when it depends upon you when you want to take it. Right? So generally we take at after 3 o'clock. But if you are doing the 1% trades and all, you may take in between also, because by the end of the day you might get the profit also. So it all depends on your
no, but it will show live market. It would be during the live market the entry would be flashed.
Yeah, in the live market entry would be displayed here.
Or
and
it will be just
keep on change actually. Keep on change.
Okay. Okay.
Okay. Similarly, there is a watch list. Each pair where it stands. So Bank Nifty Federal Bank is at 3.33. So I can filter out with sectors. I want say energy. Energy with this combination 80 to 100. I want everything. I can just say okay. I'll say all combinations. So these are the filters I can. I'll say select. So all filters. I can do a search. I want to know where I see. So all pair combination with ICICI. Similarly,
can we see the rating in this list, sir? The list with
watch list you cannot see rating, because rating we have given for a portfolio setting, right? Not this is like unfiltered kind of thing. Okay, so you cannot see the rating here. You can see the active trades. You can see in safe level. Are there any active trades? There are 2 trades which are running in safe level 1. Which is like Gujarat Gas MGL, only one day. That means 29th entry was has happened. Now negative, and this is since 25 days it is running. It is 18. I can expand and see how it has performed. Yeah, it gave actually 5% returns here. Okay, so yeah, the thing is, it has entered at 2.7. It is looking at 1.7 as the target, but it did not come. 1.86 only it has come. So still 1.7 is not hit. So it is carrying on the. Now if I see unfiltered one, you will get lot of trades. Okay. Now 1 day is there, 5 days. Some trades are going on since 223 days. L&T, BHEL. So entry was at 1.86. But still it has not hit the 1 standard deviation. It's like this one only. So 3,71,000. So if you are not using stop loss, and if you say that I am going to wait, then this kind of losses will be seen. So the same thing here, if you see 0, overlap 1, overlap 2, 3, 4 overlaps. And here 5th overlap is there. So that's why we put 60 days or something, so that this kind of losses we won't see. I can see 223 days, it is still going on from the first day itself. Entered at 1.68. Then, so it is hovering around 2 standard deviation. Below 2, 2, 2. It has not come to 1 standard deviation. This is the lowest it has come. But it may come to 1 standard deviation, but you will end up in loss because it has taken so many days. So instead of price ratio coming down, the mean has moved up. So definitely you will get a loss. Okay, so yeah, this is unfiltered. In safe level 2, any trades are there? No trades. Similarly for divergence, if you see for 1% target, some trades are running with 35 days. Here stop loss is 10%. Here we are not using the days, but we are using the 10% as a stop loss. So it is running. Fair value convergence for 85%. One trade is running. Lupin Dr. Reddy's. At this combination, same Lupin Dr. Reddy's is running. Hurst, no entries. Like that you can explore what are the active trades, what are the closed trades. You can see.
So do you have any specific strategy which is working for you, like which we can already run and we can experiment with that as well?
Yeah, that's what. See, these settings I have created, right? These combinations and all, I have checked all combinations and I have said, okay, this combination is looking good. See, for example, here, fair value divergence, I have created with, okay, this combination is giving me good returns. If you see here, 6 trades at 1 standard deviation, at divergence 100%. So you are making so much money. So whenever you are getting a trade with this combination, you can take it blindly, right? So you should not do the unfiltered, right? So unfiltered is only just to know what kind of trades are coming. Now, for example, if you say anyhow I don't want to trade unfiltered, I can just switch off it. Okay, it will not display the unfiltered at all. So any trades which are coming up, you can see. For example, how do I decide whether to trade or not? Just now I have given an example, right? So in the entry section, I got this trade. Even though it is rated, I am not trading because I know that Bank of Baroda results are coming up. So yeah, this one, whether should I trade or not? Okay, I clicked on that and I saw that there was no trade for that combination. That's why we have not given trade. Now can I trade? Now the same trade has come in 2 different levels. That means, okay, it is better because 2 different settings it is giving entry. Let me take that. Okay, so that kind of thing you can do. Okay, Bank Nifty, an entry has come. Now with experience, you will know that 248 is giving good returns for you or 48 is giving good returns. Okay, definitely 248 would be much better because 48 is considering only the recent activity and giving you entry and exit. But here, the stop losses need to be used in the 48 candles. Without stop loss, you should not trade at all. And in fact, the target and all will be much quicker compared to the 248. See, in this combination, we have considered all the pair combinations and we have created some portfolio settings, right? But to make it much more specific, you can create subset, right? I will create only banks and see how what combination is working for only banks. Like that you can do. So these I have created. So what you do is you just explore them. You can create your own. You can expand the universe of pairs. You can add new pair combinations, right? So there is a lot need to be evaluated, not need to be explored in this model because in the earlier model it was fixed, so you no need to do anything. It's like a ready-made thing, right? You just see an entry come, you take. But here, everything depends upon your profile, your funds and all. You can take decisions. Let's move to the positions. Position simple. You track the active trades. So I can add the trade and I can track. Okay, which portfolio? Today one new trade has come, right? F is this one. So I'll say F level 1. One trade came. Wipro TCS. Okay, select this one. Whether you are doing lot wise or leg wise. Lot wise means it will give you lots. If you are doing leg wise, I'll say you are investing 5 lakhs. No, I don't. For 48, I want to do only 2 lakhs per leg. I can automatically total quantity is set, and you can just take this quantity 45 and 280 submit. So that is tracked. So you can track what is, for example, these 2 trades 8 days and yesterday one trade. ICICI IndusInd Bank, which is Banks PRC 248C. So, and you can edit and you can do all sorts of things. You can explore this one yourself. Then closed trades are there. You can check the closed trades report. And there is like dark mode is also available. You can just switch to the dark mode. Yeah.
And the data is updated on real-time basis.
Yeah, data is real time. Yes, data is real time.
So if you see the prices in the open market, it will come real-time basis, no?
Real time, yes. Real time in the sense there would be a 30-40 seconds delay.
Yeah. And are you not trying to put the option how to do with the options in this? I mean, lot size, what you are saying is the future lot size, no? If
Future
we
lot
do,
size, yes.
yeah, if we want to do with the option, something option buying or selling, do you think it's compatible with that or no?
See, the entry signal remains same, right? So
Yeah.
which instrument you are using to trade depends upon you. I want to do with futures, I want to do with CFDs, I want to do with options. That's your call. If you want to do with options, then you need to be little expert in options. Otherwise, you will lose money.
Yeah, yeah, of course, of course. Okay, thank you.